All right, guys, what's going on? Good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking time out of your day to join me today and every afternoon, 5 p.m. Eastern Standard Time. Let's go ahead and go over the markets. Before we do that, make sure to hit the bottom right-hand corner of your screen. Little white logo, click on that, turn on notifications, subscribe to our channel. Make sure to click like if you like these videos. As always, thank you so much. Let's get started. All right, the Dow closed down 184 points. The Nasdaq only closed down 35 points, 0.28%. S&P down 0.72. Was a whipsaw day today in the markets. We're going to go over kind of a timeline of what happened. The VIX, interesting here, down 3.62%. That to me is saying a lot. So not a lot of fear. Granted, we are above 35, but it did hit some resistance short term on the 1 hour. So again, something to look forward to. Maybe we can get to around 32, which was the lows today, around 32.69. That could get us a little more of a shoot up. But again, right now, in terms of the VIX and the S&P, you're starting to see a little bit of a decoupling where the VIX is kind of telling us the fear in the markets, yet even though it was red today, just like the markets. Equal weight S&P was down 0.72%, as basically as much as the regular S&P. Take a look at small caps. They were up today, 0.55%. So maybe small caps are telling us something. Dollar index down 0.17%, 99.12. 10-year Treasury, 1.872%. So yields did go up about 121 basis points. Yesterday was pretty quiet. Taking a look at the metals. We did hit the metals today. We closed gold calls. We closed silver calls. They were up 2.74 today, 191.51 on GLD, 24.45 for SLV. High yield credit did fall today, 0.35%, but not as bad as expected in this kind of market. LQD, investment grade, took another hit down 0.60%. So again, you're starting to see the spreads between the treasury yields and investment grade corporate bonds are starting to widen a little bit. That tends to be a recessionary signal the wider it gets. So again, that's why I always kind of talk about the high yield credit and investment grade markets, because it's so important. This is how liquidity is generated for corporations other than just equity raising. So if they can't generate enough cash to fund their operations as high yield credit goes up, then you're going to see a lot more stock offerings to dilute current shareholders. So again, if you're somebody that has a lot of aggressive growth names in your portfolio, you really want to keep an eye on HYG and their cash positions. So again, like names like high yield growth names, some of them have a lot of cash reserves. I can't name any on the top of my head, but again, if they have good cash reserves, then HYG is not such a big deal. But if they're burning a lot of cash, then there's a problem. That's where you're going to get a lot more drop in those prices and those companies that don't have that cash available, because liquidity is key. As we know, inflation's high. Again, interest rates are going to go up, we know. But again, liquidity is really the driving factor here. So what you're getting is kind of a rotation out of the growth tech, the risk on, and you're getting on more to the risk off as everyone's worried about Eastern Europe. That's just a rotation, again, into hard commodities. Again, we saw what aluminum did. We've seen what nickel did overnight in the London trade. That was basically limit up and they stopped trading it. So, I mean, it's a very, very weird period. I mean, it feels like in the last 2 years we've gone through a lot as an economy. So we've been here the whole way. Crude oil down up about another 4.5% today, 124.77 a barrel. There showed a little bit in terms of there was some API numbers that just came out, and they're showing a actual stockpile of crude of 2.811 million barrels. The forecast was negative 0.8 million barrels. So about 800,000 barrels in the red was the expectation, but we actually had a stockpile. So again, if we start seeing a little more stockpiling, maybe more supply coming in the market, that should stabilize oil prices and then we'll come back down for the most part. But we're starting to get close to real big time. We're not really yet. We're at 124. I thought really 125 would be the max we get, but yet there's been an absolute panic in terms of commodities, buying panic. 124.27 is really your all-time high. Could we get there? I mean, that really depends on what happens in Eastern Europe. I mean, we already dropped the shoe in terms of banning Russian exports. Europe has not gone on board with that. The US is. So again, that just adds more of the accessibility of crude to be a little more stretched as supply needs to get online in order to fulfill everyone's demand. As we get closer to driving season in the summer, people are traveling again. It's not a COVID economy. OPEC was basically, in a sense, kind of drilling like it's still an OPEC economy, and yet we have the grand reopening. So it's not really just goods. What we're doing now as an economy is transitioning from buying stuff to doing stuff. to quote Tony Dwyer, who said it best on CNBC. So that's kind of where we are going. We're going from durable goods, kind of the stuff that we bought during the pandemic, and now to wanting to travel because we didn't travel. I'm speaking in generalities. Most didn't travel, most didn't drive, obviously during the pandemic for safety reasons and what have you. But that's what we're seeing. We're seeing a shock to the system where they weren't prepared for that, and that's where we are. Taking a look at gasoline futures, 371, up 4% today. And the Bitcoin is at 38,580. Right now, it's pretty matching the spot right now in futures, and Ethereum was up as well. So we had some stocks go up today. They were a lot higher than today, as we know. Let's go and take a look, excuse me, at the actual group screener and see what worked, what didn't on FinViz. We'll take a look at it together. Energy, again, being the big winner, up 1%. Defensives, again, those are more of the recession hedges. Consumer defensive down 2%. So again, can't really scream, oh, it was completely risk off because it just wasn't. Consumer defensives didn't do that. There's reasons why that happened. But you can see financials were green today. Communication services were green. Cyclicals are green. Again, technology kind of down slightly. So relatively speaking, at least the NASDAQ's not down completely, but it was up a lot higher. And that's got to be really tough on the bulls. Bring up a heat map here. You can see Google was up, Facebook was up, Tesla was up. But in terms of the consumer defensives, like I spoke to earlier, Coca-Cola is taking away operations and products from Russia. PepsiCo, same thing. A lot of these consumer defensive names are starting to pull out of Russia. And that's going to hurt, obviously, margins. It's going to hurt bottom lines for these companies. So it looks like the market is trying to price in that loss of revenue in Russia and Belarus, for example. I don't know if Belarus was taken out, but again, you can see energy still continuing to go. I did get out of my XOP position, the drillers weren't exactly doing well today for the most part. So XOP, if I can look at it here, it was up marginally about 1%. Right around 126.95. At its peak, it was at 131. I think I closed out like at 123 or 124. So kind of updating that XOP position we were long since July. That's where we are. So I'm not really worried about selling at that point. We might be getting to the top of energy soon. I did trade XLE with Masterclass students today for a quick 40%. I think they got 30. I closed out at break even because I held it for a little longer, seeing that we can get a little more of a push down. It didn't, so I broke even on it, but the members got it. So again, we did kind of touch a little bit on energy stocks for the most part. But a lot of news, obviously, this is kind of a step-by-step, hour-to-hour day. We had Europe bid it overnight. We kind of fell at the open, and then we had, as we continued to go down, we closed our puts, and then Biden was about to speak regarding the Russian embargo of their oil. Putin said afterwards that he's embargoing anything out of Russia until December 31st. So again, kind of embargo for embargo, I guess. And you can see that we got that right after. Interesting enough, this is when Discord went down for everybody. AWS went down, Amazon Web Services. They're the cloud provider for Discord and a lot of other applications, including, I think Coinbase was having issues at one point. But Discord being the big one was having issues. But Facebook, WhatsApp, and everything on Twitter was working fine. But Discord was down. It came back on. We bounced a little bit. Obviously, I'm just kidding on why Discord was down. But again, you could see that level, guys. 42.52. We got as high as around 42.73. Expected to possibly go a little higher, get us back to the next range. We rejected it. We came back down. So we're pretty much right in the middle of everything. Again, we're still between 42.52. We didn't sell above it. 41.01. So again, more than likely down is the trend, is what we're going to get. We have 4 days in a row of S&P being red. We've only had one instance that we had five days in a row being red in the S&P. That was in January, right after all-time highs. So something to think about. Do we usually get 4 days in a row? Probably not. We'll probably get a relief rally here and there. With that being said, I do have some AMD calls that actually we're doing fine today. We're pretty much holding that 200-day, so I'm holding on to that. And we got some GLD calls that were re-entered as possibly we get a little more upside. Maybe retest 193.30, that peak. Maybe get some panic out there. Who knows? It's good to be hedged. Again, gold has been doing great. We had a gold futures trade that was a record-breaking trade. I think it was about 80 points. In regards to gold points on futures, it's a lot. So again, a lot to unpackage. I have not bought anything in terms of stock as of yet. Obviously, we're seeing that we're still getting continuation down. We talked about the levels that could possibly be done. 41.01 being the Russian invasion lows from last 2 weeks ago or a week ago, about a week ago. So again, we could retest that, we could bounce it, but right now, 41.01 is your support, 42.52 is your resistance, and you're basically just trading this. If you're a trader, you're loving this because of the volatility. You're trading volatility with options and futures. This gives you some entry in the game. If you're an investor, you're pretty much just pulling your hair out, or you pretty much don't care because it's your retirement account. I know it's a lot to be said. Good afternoon, guys. Hi, Gar. Thoughts on how CVX can go? CVX is going to move directly with one thing and one thing alone. That's energy. So you can see where we hit the top here, 129.33, 174 is here. Again, you're pretty much buying extremely expensive crude companies right now. They're taking advantage, sure. If you wanted to own some energy, I just wouldn't get here. Maybe if we get a little bit of a pullback, possibly, but I really wouldn't want to pull at the top. Could we get continue higher? Absolutely. We can get to 200 if anything. I mean, you'd have to expand it out. When was the last time Chevron was this high? Decades. I mean, this is an all-time high for Chevron. So again, would you really want to buy at all-time highs? I probably wouldn't. So I mean, it really is the high as imagination goes. But again, it's the risk. Carl, stocks are like COP are on hold from investment perspective. I got in last fall. In terms of energy stocks, COP came down, CVX being the one that's doing well. Again, maybe put a stop at 95 if you want to hold on to that for a little more of an upside. Maybe 94.46, that's okay. It's a couple of bucks away. That's not terrible. That's your breakout retest right around 94. I put that stop there and let it ride. Or what you can do is take away your initial investment and you're just letting profits go, and you can kind of mess with that here and there. I don't know if any of our investment club actually closed XOP. I did, and that's okay. But again, everyone's different. Everyone has their targets. I mean, basically, XOP did hit the target at the end of the day, around 130, 132, which is what we got today. So I did miss out on a couple of bucks, but I'll live. Let's see, still feeling good with AMD? Yes, I do have AMD calls still holding here. And you can see a relatively decent day, even with the market being the way it is. So again, I expect a break of 107.63 tomorrow, as we probably bounce back, as we're getting nearing support here on S&P futures, the low being 41.39. More than likely, we'll just kind of hold this. If anything, bounce overnight and see if we get continuation, get out of AMD, possibly around 109 tomorrow. I expect us to kind of bounce tomorrow, to be honest. We don't have CPI till Thursday. So let's see if maybe the shorts are going to get out, or we're going to see some bulls buying here. But at the end of the day, we're still right in the channel, right in this channel here. That's all we're stuck in. NASDAQ is nearing support as well. So again, good of a bet for upside, but let's see if we can hold that 103.7 level for the 200-day. And we're right back right here at support, right from we had last Thursday. So not a bad pivot point to play AMD at all. Actually, we were green earlier in the day. We were as high as 22%, I believe. $100 still a good point. AMD, I love AMD, don't get me wrong, I really do, but I'd rather not buy anything yet because we may have a little more downside where we can get some stocks on the cheap. So again, until we start seeing some meaningful movement above 44.54, 4,500, I would say 4,500 to be all clear to the upside. Downside, I mean, you can really start getting to around 4,000, and 4,000 I'll start definitely taking a look at least to buy some stuff. But 36.64 could be your worst case scenario. It could definitely be in the cards, but need 41.01 to break, and I don't know if we're going to get that because that was a low liquidity over the weekend complete panic sell on futures, which was bought up immediately. So there may be a lot of buy orders right around 41.01. So you may have some demand here if you're looking at E-mini futures. Hi, Guard. I heard Russia has a massive in-house stockpiles of gold and still buying the domestic market. Do you think they can find a market to unload? Could be down pressure soon. That's another thing too. If they start trying to sell all the reserves, that could be a big problem for buyers. Again, the price is going to get lower and lower. So I do own some gold. They're good insurance. Again, it's just coins. I have a video on it on YouTube if you want to take a look at it. A couple of gold coins, some platinum, a platinum coin, and what have you. So not a ton of exposure to metals, but I think the best thing to do here is that GLD is a good investment protection or insurance for any craziness, especially in Eastern Europe. So again, that's kind of your best proxy, especially as a cheaper one. SLV, GLD are cheaper ones than it would be Aspire or Q. So again, kind of use that as protection and use it as a way to hedge or for any kind of craziness. But in terms of owning gold at these levels, I mean, that's really up to the preference of the investor, because if you think about it, the last time we've had any kind of movement in gold futures, I mean, we were kind of steady for over a year. We were steady, not doing anything for a year. It finally is retesting basically the July 2020 highs. Really, if you break that, then you can start talking about a next level up. But as we go ahead and expand, you can see that gold is at multi-decade highs in terms of futures. So we're starting to push higher. The question is, hey, if we break that next level of 2085, which is the all-time high, really you can get an extension to 2349, and you can just keep hammering gold calls as basically world politics crumble, if that's a way to look at it. Thoughts on Netflix? Netflix, just in general, everything else. Netflix took away their service in Russia. Again, headlines coming in, the market coming down. Really, you have down to around 300 where you have support. Do I think Netflix is a fine company to own? I do. But again, right now the market is pricing in tons of fear and tons of just world war fears and inflation fears. It's so much fear right now to buy anything. There is an upside gap right at 507. That could more than likely, fill down the line. You're talking about maybe next year or late this year. But again, it all depends on really Eastern Europe, and I hate to be kind of a hostage to that. But that's where we are. That's the facts. And we're still stuck between 42.52 and 41.01. Are you picking up any discounts? I bought Shop and Amazon. I love Amazon. Shopify I don't own. But again, I do love Amazon. Again, I love these companies, but I'm willing to wait, be a little patient, maybe get a little lower, maybe to 4,000. 41.01, possibly I'll start nibbling here and there because that is big time support. But again, you can start seeing 4,000 coming into the conversation. We're only 152 handles away. That can go quickly, and we're starting to break down levels. Again, you can see that we had 42.52 to 43.71, and then 41.01 to 42.52, and that range has been pretty much respected so far. But until then, 41.01 could hit, and you probably can get a little better of a deal on these stocks that you really want. Just start making a list. If you start getting to 41.01, 4,000, then you can start buying. That's what I would do personally. Thoughts on CHPT? ChargePoint, I do have Blink. ChargePoint is just as good. I love them both to own long term, especially if you're bullish EV, which I am. In terms of Facebook, I mean, 189. Can you believe that? This stock, I mean, look how high it was before. It was 384. And you're starting to retest. You could possibly retest the COVID lows of 140 if things get really rocky. And that's just something we have to prepare for. So it's kind of like in 2020 March. A lot of people will ask me, well, how low can we go? I mean, you can't really bet on the end of the world because if you're right, it doesn't matter anyways. But at the end of the day, you can still have some levels and targets that you're looking for. Obviously, if you're trading or you're investing or what have you, you still want to have some cash reserves. Don't use your emergency fund to invest either. Don't invest unless you don't need it within the next at least 3 years. But I mean, right now, is it a good discount? Yeah, it looks great. PE multiples are way down on Facebook. The problem is that the market is still going down. It's going to drag Facebook with it. So Facebook isn't as independent as it was because as it gets bigger in terms of market cap, it becomes more and more weighted with the S&P, just like Tesla is. Tesla had a good day today, up 2.46, while the S&P was down. Sure, but those are few and far between. Usually you get some kind of news or kind of some economic backdrop to boost certain stocks in certain sectors. Just because Tesla is part of consumer discretionary, they're still part of technology too. So it's kind of a hybrid in a sense. Crypto, I still own long term. Nothing has really changed there. I mean, this is the name of the game with crypto. I still hold mine and I still buy every week. So my thing is just to kind of hold on and hodl, right? I mean, if I needed the money, I would cash out. I would have no problem doing that. I'm still up on Bitcoin, Ethereum. Luna token has actually done very well, actually. Wow. XRP I still own, but Polygon, Tezos are red. The graph is red. Stellar, Shiba, SushiSwap are all red. And again, if you have time on your side, that's a good thing for an investor because you really don't have to worry. So, I mean, if you need the money, sell it if you need to, but if you don't, just kind of hold off a little bit. Maybe put a stop if you really want to sell at a certain point. But other than that, there's not much you can do. I still buy every week, so that's how I do it. All right, guys, have a great rest of your day. We'll go and leave it there. I'll catch you guys tomorrow for the morning note. I didn't do a morning note this morning on YouTube. I went ahead and sent out the Reuters headlines because there was so much. So that just felt a little easier this time around. Tomorrow I'll catch you guys in the morning note. Have a great rest of your day.